Okay, I got 6 o'clock. I think we got all the members here. I think we got Candace Jones. And we've got a few other people that just kind of round out the picnic, including one Mr. Rick Alonzo. So, and I know you're our faithful and true auditor. So I will call the meeting to order. And I will ask if there's any public comment on non-agenda items.
No such comment.
Thank you, Alex. So we're going to go right to approval of the minutes, September 1st.
Motion to approve. Tammy, you're muted.
I see Tammy's hand.
Yes,
I'll take it for a second.
Yeah,
Oh.
There's a small correction to the
Okay.
minutes. The minutes said our next meeting was going to be November 16th, and it's actually December 15th. So
Okay, now at the time of the meeting, was our next meeting going to really be November 16th, or is that a mistake?
If we look further down in the minutes, that might clarify for that, because we did talk about some future meetings and canceling them and so on. Right there in the minutes.
And I don't have them in front of me. So my point is, the minutes reflect what happened at the meeting. If at the meeting we really stated it's going to be December 15th, then that's a correction. If we stated November 16th and then post-meeting changed it, then, you know, the minutes are correct. So that's my question.
Yeah.
well, I don't know. I have to go into board docs. It's so minor. We can just leave it.
No one knows the answer to that. I don't know.
I tell you what, I'll amend my motion with as corrected, and let's go with it that way. As a practical matter, our next meeting was December 15th, so I don't mind having the minutes changed to reflect that, even if the change happened later.
Okay, so will the second accept that there's a motion to approve the minutes as corrected?
I second that.
Okay, I think so. Okay, all in favor, please say aye or raise your hand.
Aye.
Okay, 3 ayes and 3 hands, so it passes 6-0. Okay, so we're gonna dive right in. I'm gonna look to Candace as our senior administrator, and she can point to whomever she wants on the call, and we'll go from there.
You like that pointing?
Yeah, I don't know. You're gonna have to point to the right box, and it's
The
probably
box
different
that
for
might
you.
be different for
Yeah.
everyone.
Yeah.
Well, welcome everyone. We have our partners, our auditors here this evening who have prepared our draft budget and audit statement. We are actually going to turn a good bulk of this over to them. Hedva, is there anything that you wanted to start with? Or should we just kick off the run through?
No, I kick off with the auditors going through the financials.
Sounds
Whoever
good.
would like to take that. All right, Rick.
I'll take the lead, and also have Ryan Milligan with me, who's our senior manager. So he handles the day-to-day operations of the audits. I hope everyone has had a chance to review the draft. I'll go through the pages I think are really important, but as always, this is your guys' meeting, so feel free to let me know if you think I'm going through too much detail or not enough, and just let me know. I have no problems. Feel free to ask questions as we go through it as well. But to start off, the focus of the audit is to render 3 opinions. We're going to give an opinion on the financial statement. In addition to that, we give an opinion on state compliance. Each year, the state chancellor's office will give us a laundry list of items they want us to test. And the last opinion we give is on federal compliance as well. So those are the 3 major opinions that we give, and that's our scope of the audit. So when you look at the audit itself, all the pages within the audit report are really the responsibility of district management. The only thing that's considered the auditors in the audit report is the audit opinions itself. So I'll go through the pages. I'm not sure, Ryan, do you want to share? Do you want Ryan to share his screen so he
Sure.
can kind of
Let me.
follow along? Or
I think sharing screen would be great. Do you have the,
Yeah, I got a
You got-
PDF up. Give me
Okay.
1 second.
wonderful, thank you.
No problem.
And Ryan, just for conformity, are we gonna be looking at a draft that's dated 12/10/21?
Yes,
Great.
that's the one
what
I'm
we
bringing
have.
up right now.
Yeah, super. That's great.
yeah, that'll work out good. So then you guys could see what everything I'm going over. There. So, I mean, just to start off, our audit was for the most part done remotely. I think we did come out for a day or two when we came out. So just to start off, I'd really like to say thanks to district management for all their hard work for getting this audit completed. As auditors, we ask for a tremendous amount of information, and we really appreciate how quickly they give us our information. This district is always really good about providing us our information. Everyone's always very professional during the course of the audit. So just to start off, we'd really like to thank the district and their help in completing this year's audit. I mentioned that the audit opinion is basically what is considered ours. This is the audit opinion for financial statements. The first page is basically gives management's responsibility to the financial statements, the auditor's responsibility as well. But really the most important paragraph is at the on page 2, where it says opinions, where it says, in our opinion, the financial statements referred to above present fairly in all material respects. This is what we call an unmodified opinion. It's the cleanest opinion you're going to get from an auditor, and it states that the financial statements are fairly stated in accordance with generally accepted accounting principles. Now, keep in mind, most districts receive unmodified opinions on their financial statements because what happens is the auditors come in, they audit the numbers, and if they find any what we call misstatements, the auditors will let the district know. And if the district accepts those misstatements and basically incorporates them in the financial statement, then the district receives an unmodified opinion. Your district received an unmodified opinion without any audit adjustments. So we didn't change any of the district's numbers. All the numbers that were given to us for the different assets and liabilities and revenues and expenses, we agreed with those numbers. So that's a really good thing that the district had. They have an unmodified opinion without any audit adjustments. And then starting on page 4 is the management discussion and analysis. I really think this is probably the first place I would go to when I look at the report. It provides really good information. This is prepared by management, and it gives basically an outlook of June 30th, 2021 compared to June 30th, 2020. So it's a really good place to go. It has financial highlights. It talks about, you know, where the district anticipates them going in the budget in the future. So it's a really good place to go. It has a lot of information on why there was changes from 2020 to 2021. I always start off by reading the MD&A because it really gives you a good outlook of how the district is doing. Plus, what's good about this report, if you ever can't sleep at night, if you just break this out and start reading it, this report is so long, it's going to help you fall right to sleep. So starting on page 13, this is a statement of net position. If you guys took an accounting class in school, it's basically the balance sheet. Keep in mind now, this is in accordance with GASB 35. So this is the district's required financial statements in accordance with GAAP, generally accepted accounting principles. So a lot of information that board members receive throughout the year is on a fund basis. So you're going to see information about the general fund, the special revenue funds, the capital project funds. Unfortunately, these financial statements they don't have any of that. Basically, under GASB 35, which is required for community colleges, all of the funds are consolidated into this one activity right here. And I see someone has a question.
Yeah, Rick, I have my hand up and I'll ask a general question first. Are we gonna later look at another version of this where we're comparing it to the prior period?
Anything that these financial statements aren't comparative in nature. Where you're going to see the comparative information is on the MD&A.
Okay, and the reason I asked that is specifically now honing in student receivables at 46669. I don't recall, is that number similar to, greater than, or less than typical or prior year? And if we're going to do some comparisons to prior years later, I can hold off on that question until we get there.
I think
Do you know that, Hedva, off the top? Do you want to take Trustee Osterling's question?
Sorry, my internet's a little bit unstable. I'm sorry, can you
Yeah,
repeat that?
Hedva, my first question was, are we going to be looking
I
at
still
a
don't hear it.
comparison to prior year later on through this walkthrough? And if we are, I'll hold off on my question. If we're not, I'll ask the question now. And that is the student receivable number at 4,669 million. Is that about the same as always, or higher or lower than prior year? Because I know we're dealing.
Where
with
do you
COVID.
see that number, Jim? I'm sorry. Oh, 466 student receivable.
Yeah,
Okay, I'm sorry.
4,669. Yeah.
Got it.
I have the prior year audit pulled up on my other screen here, and last year it was 4.9 million.
Okay,
So it's down
roughly the same.
slightly.
Yeah, great. Okay, thank you. Carry on. Thank you.
No problem.
Yeah, unfortunately, that's one of the things too. These financial statements aren't comparative in nature. So, that's a good question. And a lot of the information in the MD&A kind of can go through a comparative information, but some of the stuff in the MD&A is consolidated too. So like when you look at receivables, the student receivables is consolidated with the regular accounts receivable. So I think that's a good thing to do it as a board member too, when you're looking at the report, is also take out last year's report and kind of can look at the differences too as well. That's a really good idea.
All right. Yeah, thank you. And go ahead and carry on.
No
Sorry to
problem.
interrupt.
No,
Thanks. Yeah.
we like questions. So just
Just throw them out as we go along.
Throw them out.
Please.
Yeah, we don't mind at all. I think the meeting goes a lot better if we have questions rather than just Ryan and I talking. So feel free.
And Rick, I might be getting ahead of myself again. Further on down, we've got our aggregate net pension liability at 196 million. Are you going to walk us through that complicated
Sure.
review of that number?
Sure. That's always an important number.
Yeah.
So
So I'll hold off on that question until you get there.
okay.
Okay, thank you.
No problem. So basically, when you look at
Yeah,
the
and Tammy has a question too. So Tammy, just unmute yourself and
it's just
pop it in and he'll answer it.
Okay, yeah, there was noise in the background, which is done now. So, I read the kind of the narrative at the beginning, and so I have some questions. Do you want me just to kind of rapid fire go through them, or?
sure.
Okay, my first question again, let's see, that would be on page 8. The first bullet point, the reserves, first of all, have typo. I'm sorry, I always find typos. Have been earmarked to partially address certain unfunded cost escalation. That makes it sound as if that is a given. Don't you mean potential or possible cost escalation, or are there future escalations that you know about or that are known?
So I'll leave that up to district management. That's theirs. The MD&A is, they write that.
Oh,
So if Hedva would like to jump in, or
Edwin, do you want to take that or do you want me?
Yeah, I can comment on that if you want, or Candace can.
Go ahead, Hedva.
Okay.
You've spent a lot of blood, sweat, and tears on this report.
Okay, thanks. Let me just preface it. My internet's really down, so sometimes I can't hear it, but the reserves, when they say cost escalations, we have a lot of unexpected costs throughout the years. And some contracts, there's escalation in the costs or in utilities, and there's a lot of unpredictables that sometimes you need to use the reserves for. We rarely do, but that's what it's there for.
Okay. All right.
Does that
Well,
help?
yes, it just seems like they should be potential or possible, but just, okay. All right. So they could happen, and that's why it's there. I had a question on the increase of 0.5% in salaries. Is that a one-time expenditure, or is this baked into all future budgets? The percentage increase. That is the next bullet point.
Are you talking about the percentages of the salaries as opposed to the percentage of total expenditures?
Yeah, the next bullet point, salaries and benefits of academic, classified, and administrative, salaries of district employees. It just crept up a tiny bit, but it just worries that, creep over the years, amounts can really add up. So it's that second bullet point under the reserves on page 8.
91.57% of total general unrestricted fund expenditures are salaries and benefits, I think is the point.
Right. Right. And they are, as salaries and benefits cost more, as they relate to the total general fund unrestricted costs, they represent a higher and higher percentage. And it is creeping up. It used to be 88, 89. There's just more allocated to, or need to be allocated to salaries and benefits. So that is increasing, and it's not just a one-time thing, it's a general percentage of all the expenditures. It's just a relationship between how much of our total general unrestricted costs are in salaries and benefits.
And keep in mind, some of the benefits the district has no
Does that make
control
sense?
over. Yeah, and what I was saying with some of the benefits, keep in mind the district has no lot of control over this. Some of that is imposed by the state in terms of the PERS rate and the STRS rate. So that's also plays a part in, why benefits are going up too as well. And that has to do with unfunded liability. There's a large unfunded liability for the state in terms of PERS and STRS retirement costs. So as a result, those numbers are continually gone up by significant amounts to the district too as well. So that plays a big portion of why you're going to see benefits increase over the next few years too as well.
And it's not worrisome?
Absolutely, it's worrisome, right? And that, it's basically, up to the district's management and the board too as well to keep that in mind, that, benefits are going to increase. And, when you're looking at your budgets too as well, it's really important to keep that factor in mind, but definitely worrisome. Absolutely.
Yep. And Tammy, if I could try to give you some context on top of what Hedva has already said. This isn't that they increased 0.5% over the prior year. The increase over the prior year was probably greater, and I'll let management tell us what that number is.
But it's grabbing a bigger proportion of that budget, of that general fund.
Exactly. And then Hedva and Candace and Jesse, do we have a benchmarking of what typical community colleges of our rough student census and so on, what their percentage is of unrestricted fund expenditure?
I could take that's generally between 88 and 92%, but it's going higher and higher nowadays.
Yeah, so we're experiencing that, and so are our peer institutions.
All right.
Because I remember when I started not that long ago, 6 years ago, these numbers were in the mid to high 80s. And so they've certainly gone up.
Yeah. So then related to that, further down, there was some reference to a reduction in state pension support. Do you want me to find the bullet point?
I think that's related to Jim's question about the 196 million back on the other page, and one of my questions / comments.
Yeah.
That looking at, and I always love all that detailed accounting on the cash flow in, cash flow out on the pensions, but basically I think our pension obligation got worse by, and I can't remember the delta, but it is 13 to 18 million
12.7.
or something.
Yeah,
What,
12.7
12.7
higher, John.
million?
Yeah,
So my
so
question is, I thought the state paid 2% towards our pension liabilities last year.
yeah, so maybe we could just ask somebody, Candace, Tedva, Rick, to comment on the whole unfunded liability
Yeah, I mean, keep in mind,
picture,
when you
because I
look at.
think there's all these different questions centered on that
Yeah.
kernel.
Keep in mind, when you look at the pension liability, that number is going to change every year because the district receives an actuarial study every year. That's just the estimate number. So basically what happens is each year, the district will receive another actuarial study, which is basically an expert comes in and sees and determines what the estimated liability for pensions are. So you're not going to see that pension number stay the same. It's either going to go up or go down depending on a lot of different factors. There's just a lot of assumptions that comes in. The discount rate, the inflation rate, mortality rates, all this stuff is adjusted every year. So and for the most part, and consistent with other districts, you're going to see that number actually increase. We're not seeing it really decrease. For the most part, we're seeing that the liability is increasing. So that number was actually determined. So basically the district hired, and I think they hired total compensation. Is that right, Hedva?
Well, they're talking pensions. They did that for OPEB.
Oh, okay, yeah, for pensions, yeah. So basically the pensions is the same thing in terms of the district basically has to pay, or they have to record on their books the portion that's attributable to the district. The state's actually going to pay the liability, but what happens is how the state's going to make up that money. They increase the benefits in terms of the PERS and STIRS rate for the district. And Hedva probably could talk about what those percentages are now, and it's going to hit 20% in some cases, over 20%. I think it's like 19% right now for STIRS, but that's going to go up to over 20%. So that's how basically the state's going to try to fund that unfunded liability by increasing the pension benefits that the district has to pay for PERS and STIRS.
So what still is unclear to me, the bullet point is on page 8, and it says the district reports a liability for its proportionate share of net pension liability that reflected a reduction of state pension support provided to the district. That's the part I don't understand, because I thought the state increased their support of pension funding. So that's,
Let's go ahead to page 8 and look at the note that you're specifically referencing, Tammy.
it's, yeah. So it starts the district report, kind of in the middle, the district reports a liability for its proportionate share that reflected a reduction for state pension support provided to the district. Why did that happen? Why did the state reduce? And then why do I remember that they gave an extra 2% towards pension liability?
Tammy, what page are you referencing here?
I'm on page 8 of the PDF.
Okay.
And it is the third from the bottom. Oh, it says 5. Okay.
Page 5.
It's
Page
8. Yeah.
Page 5 of the report.
Page 5 of the
PDF.
report, page 8 of the PDF.
Okay.
Sorry.
And then which note is it?
It's third from the bottom. The first
Okay,
sentences
got it,
are
yeah.
the district reports a liability.
So your question is that reflected a reduction for state pension support provided to the district?
Yeah. But why? First of all, I thought I remembered, okay, I'm repeating myself. I thought I remember that they gave an extra 2%. And then why did the state reduce their support for pension liabilities?
Well, there's better people to answer this than me, but my recollection is that several years ago, the state laid out the plan that districts were going to pay going forward, where STRS and PERS were both increasing in percentage every year to pretty sizable numbers, which I think is what Rick referenced. And when I heard of the 2% reduction last year, I don't know the numbers, but I think the increase, it was a 2% from the number they were going to charge us, but that number was an increase from the number they charged us before. So I don't know that the 2%, I think the number still went up. The percent we paid still went up, just not as much as they had originally proposed. And that it's going to go up again next year, as he said. Now, that's the conceptual version as I remember, but there's a lot of better people on this call that can explain it. But for a board meeting and an audit where, they're just reporting, I mean, it's an important topic, but the focus here is it properly reflected on the books, which is
Okay.
the auditors are saying they are, it is.
Yeah,
So-
and I mean, this is coming, I think, from the district in terms of this paragraph, but also, I think in 2020, Ryan, right, there was an additional on behalf that the state picked up for the district that was not paid out in 2021. So
That was
Really?
SB
So
90.
yeah, that was the SB 90 money. So I'm not sure
Rick,
if it,
the state contribution that they were making, let me just back up. I remember we had a PERS schedule that stepped up over years and hit 26% of salary. And then we had a STRS number that I think stepped up and peaked out at 22%.
Mhm.
And then on top of that, the state has been contributing to health, and only by virtue of us making those stepped up payments and the state helping out are we I was going to say balancing the books, but we still have unfunded liability.
May I make a suggestion here? This really is an extremely important topic. And it's great that this audit highlights it. But in some ways, I would recommend that we kind of parse this discussion
Sure.
with the focus here being that the numbers as reported by our management are properly reflected, which is the purpose of the audit. And then suggest to the board that we have a future agenda topic to the board to bring all board members up to the understanding of what has happened and where the state is going on OPEB, STRS, PERS, and all these unfunded liabilities. Because in some ways it's getting lost down here in the Budget and Audit Committee, where we all go, like this every once a year, and then it kind of goes away for a year. And we do need to have some longer term foresight into how to prepare perhaps what we can do. And I know our philosophy in the past has been very simple, that if you can't outrun the bear, you just got to outrun it, a few other people, so that the bear gets them first, and then hopefully the state will swoop in and do a little bear prevention. I don't know if that's the best strategy or not, but that's kind of been what I think has been our approach on the past on that. But
So
to keep this moving, I'd like to think maybe the numbers are right, and maybe we could ask management for that at a future board meeting.
And Trustee Martin, my understanding is that the governor and his budget on January 10th is there's a lot of pressure to put a lot of money towards paying down STRS and PERS. So I have a feeling that even if we had a long conversation about this tonight, the informational change in January, especially because of the amount of revenue. So I think scheduling a future presentation or conversation about this with the full board is a great idea.
Yes,
Yeah, agreed. Let's do that. Yeah.
yes.
But thanks to Tammy and Jim for highlighting it
Yeah.
again.
Thanks, Erica. Yeah, let's do that and focus on the audit report and the fact that this is accurate.
Whether we like it or not.
Yeah, right, right.
All right,
Okay, so
I'm done.
all right, we'll go back to page 13. And what's unique about these financial statements is a couple of things. You have your capital assets that are included in the financial statements. In the past, governmental accounting never had fixed assets as part of the financial statement. With the exception of GASB 35, it required the community colleges to start including capital assets in their financial statements. In addition to that, you have the long-term liabilities, some of which we've already talked about, but that includes now the general obligation bonds, the COPs that the district is issued. In addition to that, it has the aggregate net OPEB liability, which is basically the post-employment benefits the college provides to district employees who have retired. And in addition to that, you have your aggregate net pension liability, which is the PERS and STIRS liability. So when you go to the bottom, basically the net position, and net position is basically just your assets minus your liabilities. You see that the total net position the district has is about $31.8 million at June 30th, 2021. When you look right above that, you're going to see a large deficit, an unrestricted deficit of 133 million. And basically, this is consistent with what you'll see with most of the community college districts in the state of California. And the reason why is what we've already talked about. The liabilities of, the aggregate net pension liability and OPEB liability causes that number to become basically a deficit. And this, like I said before, this is not unusual. We have some districts who actually the total net position is negative because of the liability is so large. But I just wanted to point that out there, that yeah, the aggregate net pension liability and the OPEB liability is something that I think it's really good for as a board member and as district management to really have a lot of conversation on, because these are big areas to where, there is a huge liability out there. And it's really important that the district manages that liability the best that they can. This district does a good job. They have a trust set up for both the OPEB as well as the PERS and STIRS liability. So, we always commend districts who actually set up trust to look at these liabilities as well.
Jim, do you want to ask a question?
Yeah, Rick, quick question. You mentioned that our GO obligations now show up as liabilities.
Mm-hmm.
And I don't see that for us on this balance sheet. Where is that?
So when you see the long-term liabilities,
Yep.
right there where it says long-term liabilities other than OPEB and pensions, that includes the bonds.
Okay.
So you have the current portion is $3.8 million. That's what's going to be paid next fiscal year. And then the $108 million is the remainder of it. And there's a footnote that we could go to that kind of explains.
Okay. And specifically, those are our Measure P obligations.
Yeah, you'll have your Measure P obligations. You'll have also
The COP obligations
COP,
are in there.
which the district just issued. And then you also have accrued vacation, load banking.
Claims
and
liability
your
is in
claims
there.
liability.
Wow.
Those
Okay.
all that makes up that liability
All right.
amount.
And you've got a footnote that breaks that
Yeah,
out into those component parts. Okay.
Yep.
Great. Thank you.
And we could go to that. Do you guys want to go to the footnote, Ryan? Because starting on page 19 are notes to the financial statement.
Yep.
You could always go to the notes to get detail of a number in the financial statement. So, we mentioned the long-term debt note, and that's on page 32 of the audit report. And as you can see, it's made up of the general obligation bond. The district still has 62.5 million outstanding with the GO bonds. And then the district also issued the COP this year. And that amount is close to $29 million. And then you have your smaller amounts, which is your compensated absences, which is basic vacation, and then the load banking as well, and then a claims liability, which has to do with the self-insurance fund.
Okay, so most of that is the GO bond and the COP. Great.
Correct.
Yes.
Okay, thank you.
Yep, and no problem. And keep in mind with the general obligation bond, you know, that's going to have a revenue source, right? Basically, it's the homeowners, the property taxes are received for that is going to help pay out that it's going to pay all the liability off. So, you know, that's why when you look at the financial statements, you got to keep in mind that, you know, yeah, you have this large liability, but the district isn't going to have to come up with revenue to pay the bonds. That's going to already be included in the property taxes that you receive.
Yeah, it's somewhat overly conservative and
Yes.
misleading because that will be paid by our taxpayers. Okay,
Yep.
great, thank you.
No problem. We talked a lot about the pension liability, and there's really good footnote disclosures with that. I know we've talked a lot about this in years past too as well, but we can go to page 35, Ryan.
Going up.
Tammy Silver, Trustee Silver has her hand up.
Okay.
Hi, I'm sorry, back to the obligation bond. So it's more education for me.
Sure.
Is that the bond P from
Yes.
20 years ago?
Yes.
So there's still $66 million outstanding that the taxpayers will pay.
Yeah, and on the top of report page 34, you can see the payment schedule of what's remaining on those. And then just below it is the certificates of participation payment schedule.
So you can see the years that it's going to be paid over.
So last
Like when we
payment will be
looked at
made
the
in,
financial statements, the current portion was the $3.8 million. So that's basically all coming from the bond. So next year, about $3.9 million of bonds will be paid from the collection of the property taxes the district are going to receive.
Thank you.
No problem. Yeah, there's a lot of stuff in these financial statements. That's why I always think it's a great forum that the district has when they have these audit committee meetings. It's a lot easier to kind of go over these, and then rather than just coming to the board meeting and say, hey, all right, guys, here's your financial statements. Obviously, we can't go over all this information in detail at the board meeting. So I really enjoy having the audit committee meetings. But you guys do a great job by having this opportunity to come in and ask the questions. So feel free to ask any questions you guys have. So note 9 is the aggregate net OPEB liability. As you can see at year end, it was actually determined to be at $18.1 million. This is the district hires total compensation to come in and provide them with the actuarial study to get this information on the financial statements. And as of June 30th, it's at $18.1 million. And if you go to page 38, Ryan, it's a really good footnote, I think, that kind of gets you to the, you know, how you get to that liability. So basically what this footnote says is that the total OPEB liability the district has is about $33 million, $32.9 million. However, they have an irrevocable trust to offset this liability, and there's close to $16 million in this trust. So basically the net is the $17.2 million is what's showing up as a liability on the district's financial statements. And this number is going to change every year. And I always say it's an estimate, it's very sensitive. So there's a lot of factors that determines this liability. And one of those factors is the discount rate, or the basically the district's investment rate of return. So there's a really good footnote on 39, Ryan, go to 39. So basically what this footnote says is if the discount rate decreased by 1% or increased by 1%, then the district's liability would be this. So obviously the middle shows the current liability to $7.3 million is the current liability. And that's using a discount rate of 5.25%. if that discount rate went down to 4.25%, the liability we actually closer to $20 million. However, if it increased by 1%, the liability would be closer to $15 million. So what this is saying is basically that the estimate is very sensitive to a lot of different assumptions and factors that would have to come in.
Is that 5.25% a composite return from what we read on page 38, where the US stocks are expected to return 6.25 and international 6.75, blah, blah, blah? Is that where the 5.25 is generated from?
Yeah, I think the actual kind of uses that. And Hedva, do they talk to you as well when they determine the discount rate, or are they just looking at it from the aspect of this is kind of similar to what other community colleges expect? These assumptions are really similar to what most of the community colleges uses. So I'm not sure, do they discuss with you when they come in any of those attributes?
They kind of give me what their opinion is when we discuss it. And it's Nyhart who did the actuarial study.
I'm sorry.
And they kind of have benchmarks that they use normally. What's the going rate in the actuarial studies? I don't get to just pick it. Even if we do better in the irrevocable trust, I don't say, oh, it's 8% or whatever. They have benchmarks that they're required to use when they do these studies.
Right. And it's
There's not much of a leeway in there.
Yeah, it's projected over years and years. They just don't look at it from a 1 year aspect of it.
But the concept is
That's right.
that
It's a cumulative average.
and the concept behind it is it's supposed to be what we could make in a reasonable investment. Is that the general concept then behind it?
Yes.
Yeah, that's what they're assuming you're going to be making over the long term in those OPEB trust investments.
And just not to get into the weeds, but if we changed our asset allocation of that fund, would that have an impact on
Yes.
how they assess our discount rate?
Yes.
Okay.
Absolutely, yes. All right. Let's go to the PERS and STIRS note, the employee retirement, which is on page 44, Ryan. Okay, so remember when we looked at basically the balance sheet, we saw that $196 million. This is what it's broken out to. It's basically between the Cal STIRS and the Cal PERS. In addition to that, Pasadena also has what they call the 1440 lifetime benefit pension, which is basically certain individuals will have the ability to receive 1440 in lifetime benefits to help offset some medical costs. Now, since the district doesn't require the employee or the retired employee to provide receipts for that money, it's not considered OPEB, it's considered a pension, just in accordance with generally accepted accounting principle standards. No difference in terms of the amount that you would see. It's just the fact that it's shown as a pension rather than OPEB. And that's a large liability, close to $15 million. And that's something that's the district also receives a separate actuarial study as well. That's done by Nyhart too.
Yeah.
And that's the $15 million that you see there. And then obviously the larger two numbers are the Cal STIRS and the Cal PERS liability, which is actually determined from the state of California. The district has to record their portion of that liability with the exception, and that started probably, maybe 4 years ago that the district had to start record this liability on the face of their financial statements. Keep in mind, those amounts are going to be paid by the state of California. However, like we mentioned before, what happens is the state basically has been increasing their STIRS and PERS rate to the districts over time to help kind of reduce that unfunded liability that the state has with pensions. And then if we go to does anyone have questions with those? There's a lot of information on these footnotes, and
Well, I'm going to circle back to just a couple big themes, and theme number one and most important is it's a clean opinion.
yes.
We already discussed at length what I would call theme number two of this unfunded obligation related to pensions, OPEB, STRS, PERS, that we will discuss at a future board meeting. It's my read, and would just appreciate your support and comment that I read it right, that one of the questions we do ask ourselves is, did we end the year in the black? And I think when we ask ourselves that question, I think we're referring primarily to our unrestricted fund.
Yeah.
So
And
would
I
appreciate
agree with
hearing
you.
it from you that I'm reading it correctly, that I think we ended the year in the black.
I believe so, yeah. With the general unrestricted fund. What did go up, Ryan? Do you have that on?
Give me 1 second. I have it right here.
And that's a great question, John. And I that's one of these things these financial statements do not have. You know, the general fund is so important to the district. However, you know, with the exception of GASB 35, it took all that information out of the district's report, unfortunately. And I think that's such a useful tool to the board members, because obviously when you're looking at it from, you know, capital project funds, well, the capital project funds, you want to be at a deficit each year, right? Because basically a lot of that is the bond money that the district receives. You want to see that the district is spending the money for the buildings and the projects that the voters wanted money spent on. So those funds you want to see, you know, deficit spending on, right? Because you're spending the money in accordance with what the voters wanted the money be spent on. Unfortunately, you don't see those in these financial statements.
Yeah, the general fund.
My first clue came from management on page 11, where they commented on the total revenue of 179 million and expense of 178.5. So
Right.
that's kind of where I picked up on it first, but then it kind of gets lost, as you say, in the consolidation.
Absolutely.
From that point on. So it would just be nice to be able to say that to the board, maybe when you give the report or
Sure.
the quick
Yeah.
overview.
Yeah, I'll let them know that about the general unrestricted fund. And Ryan, do you have the number that went up?
A little over 500,000.
Yeah.
So I appreciate the team in the management report presenting that.
Absolutely.
And then I think the number on, and I know on page 14, where you're looking at the consolidated, 2/3 of the way down, income over other revenues and losses, 648 to the good. And then you get into a few other numbers below that. So, which I would put more in line with, you know, other types of capital events. So that was my second clue that looked like it was in the black,
Yeah.
but I know.
No, that's a good point. Why don't we go to the summary of auditors results, Ryan?
Is that 95?
Yes.
Yes. So I always say this is a great page as well. I always say it's kind of like the college's report card, but it's their audit report card. Within this page, you know, I mentioned before that we give 3 opinions. So the financial statement, which we mentioned before, was an unmodified clean opinion. We had no findings and recommendations with the financial statements. So if you went to page 98, you can see that page is blank. And as auditors, you know, auditors always get we always get the wrath of being negative people, right? Auditors always have that perception. And there's a good reason why. We're not allowed to give positive assurance. Auditors are only allowed to give negative assurance. So a blank page from an auditor is really good. So as a board member, you know, you want to see blank pages and clean opinions. And, the district did not have any findings in terms of financial statements. For federal awards, the district also received an unmodified opinion, which I think this year is a really good accomplishment. There's so much money out there in terms of the COVID-19 money that the district received. And, this money is considered what we call high risk money that the feds made it. So what that mean is the auditors have to audit this money every year until that money is spent. Normally a normal program, auditors would have to look at a type A program once every 3 years. However, since this money is considered high risk, this money is going to be looked at every year until the district spends that money. And we didn't have any issues. The district received a clean opinion with their federal awards.
And Rick, I just want to interject, since
Sure.
you guys, the auditors, aren't allowed to say positive things. The trustees are, and I want to thank Candace and Jesse and Hedva for having an unmodified report and a clean opinion.
They're the dream team, fiscal dream team, people, fiscal dream team.
They make my job easier. I'll let you know that.
Yeah, what we can't say is that we have a lot of jobs that we haven't even received all the information yet to issue their reports yet. And it's going to be pushed back until January and February to get those reports done. You guys are one of the few that we do have that we're going to actually issue in December. So that's a pretty good sign. So we appreciate the district as well in providing us their information. And then for state compliance, so we did have a finding with state compliance. So that creates what we call a qualified opinion with regards to just that portion that the district or the state wants us to look at. All the programs were unmodified opinions except for one. So Ryan, this is a good little page. See where it says all the compliance requirements tested. So there's a good chunk from 411 all the way down to the end. We looked at everything and the district didn't have any issues. So all the programs except one received an unmodified opinion. One we had a finding on, which basically if you have a finding or an area of non-compliance, basically the state requirement is that that program is a modified program and you have to show the audit finding in the report. Now, even though the district has already cleaned up this finding, they've already talked to the state chancellor's office and did what they needed to do to clean up the finding. We still have to show it as a finding because basically what the state is saying, it was basically the auditors who found this issue. So as a result, you show it as a finding. And Ryan probably could talk a little bit about the finding in HEDVA as well, because I know they've gone back and forth on this and did a lot of work on it to help the district implement this finding.
Yes, what the finding was over the supplemental allocation that the district receives for AB 540 students. And it's based on the head count during the 1920 fiscal year. This is actually a new audit requirement that the chancellor's office required us to audit this year. And so when we looked at that number, just from looking at what the AB 540 headcount was in that year versus other years, something was just off. And when we dug into it and we looked at the reports and we talked with Crystal Institutional Effectiveness, there was just some random glitch that happened in band. I really don't have a better word for it. I don't even think Crystal does either. And it's basically is what it causes that number to be overstated by about 1,100 headcounts. Let me see if I have a number here. And because of that, the district got about $1 million extra in apportionment. However, this extra $1 million apportionment, it really never should have gotten. It really wasn't budgeted. It was just something that happened, again, just through this glitch. It's already been reported, like Rick said, to the chancellor's office. It's already been repaid. It's not something that's hanging out there. So it really, I don't want to say it didn't hurt the bottom line because it was never supposed to be there to begin with. It's not something that had happened prior to this. It's not something that happened going forward. It was just something happened within Banner at the exact moment that data was ran.
And Ryan, quick question, pardon my ignorance, what's an AB 540 student?
Oh, you may have to excuse my ignorance on that.
They're the non-resident tuition waiver student.
Yeah,
kids.
they're kind of like dreamers.
Yeah.
Yes.
Quasi?
Yeah,
Yes.
it's dreamers.
Yeah.
Got it. Okay, thank you.
But that was the only issue we had. And, you know, I know that's unique to this district. We usually don't have a finding. But unfortunately, like Ryan said, it was a new requirement they wanted us to test, and we just had an issue with it. But the district was great in, you know,
Very proactive in resolving it and getting it to a resolution. And this was resolved and done prior to even June 30th. So that's what I'm saying. There was no liability hanging out there. There's no AP on the books for this. It was, this is the issue. Oh my gosh, cut the check, done.
yeah, it did.
So,
You know, the good thing is, you know, since, you know, like Ryan mentioned, it got, you know, taken care of by year end. There was no audit adjustment that created this because of this finding. So, you know, the district has done everything they needed to do with the chancellor's office. So I don't anticipate we'll see this problem again next year. So it should be all cleaned up.
Yeah, and just a comment again to our team, thank you for finding this. We do want to do everything right and correcting it even before the auditors showed up. So thank you.
Hey, what else then on the district?
That's all I have, unless there's any more questions.
We do have a very short Measure P report also, I believe, correct?
Okay, yeah, I'll be really quick on that one. Basically, Measure P, and this is a requirement since the district passed their bonds under Prop 39. One of the requirements was the district had to have what they call a financial and performance audit. The financial audit is basically, we're looking at the numbers specific to Measure P, and we're gonna give an opinion on those. Basically, performance audit is it's basically a compliance audit. We're gonna select a sample of expenditures to make sure that the district is spending the money in accordance with what the voters wanted the money to be spent on. So when you look at the report, it's 2 reports into one. For financial statement purposes, the district received an unmodified clean opinion. So all the financial information, we agreed with those numbers that the district provided us.
Rick, I'm sorry, Rick, can I interrupt you? I see Trustee Silver has her hand up and I'm not sure
Yes.
if it's about
I'm
what
sorry.
you're speaking to right now.
Okay.
It was back on the other
Nope.
document.
No
So why
problem.
don't we wait and go through this, and then I can ask when you're done.
Okay.
Sorry, I missed you, Tammy.
Yeah, I'm sorry to apologize. And then for the performance audit, we also issued a clean opinion. So the district met all of the compliance audits that were required with Prop 39, so that the district is spending the money properly in accordance with what the voters wanted money to be spent on. And for this fiscal year, we looked at, let's see, a good sample. We looked at 82% of the total expenditures the district had with Measure P and determined that the district is spending the money appropriately. So that's a good sign. And if you go to the next page, the last page, Ryan, 17, you can see the blank page, which is like we mentioned before, that's what you want to get from an auditor, is a blank page. That's as nice as we can be.
And this will be the last Measure P audit report you ever see.
Yeah,
Yay.
money has been spent, the fund balance is 0, and that's a good point. If you went to the balance sheet, you can see that there's no more money for the district to spend on Measure P.
All right, any other questions from the members on either of these reports?
Tammy has one.
Yeah,
Okay,
so
Tammy.
I just had a question. I was thinking about the Serafian building and our capital assets account. So with the disappearance of the Serafian building for a year or so, does our capital assets account decline in the amount that building was valued at?
That's a good question. Or said differently, did we have a cost basis remaining in the Serafian building before we demolished it. And that building was built back in the 50s or 60s, I believe.
Probably not. I want to say it may have been full. Let me see if I have.
Fully depreciated?
It may have been
Yeah.
fully depreciated.
Okay.
Let me see if I can find something on that.
Ryan, you can get back to us on that one if that's
Yeah.
not readily
Yeah.
available.
So I'm going to entertain a motion to approve both of these audits from the committee and recommend their approval to the full board.
And I'll second the motion, John, and I'll just say, I think we actually received these as opposed to approve them.
Mhm.
Yeah,
That's just a technicality though.
Well, that's an important technicality because I
Yeah.
do know there are some boards that the audit committee actually approves them and then they're forwarded to the full board for receipt. So doing that the right way for this organization, I think is important. So that's
Okay.
kind of why I said it the way I said it.
Yeah.
I was gonna let both groups approve them.
Rick and Ryan, do you have
Yes.
any context on that? I'm not sure myself.
yeah, my understanding is you would receive the reports because they're basically our reports as auditors. The independent opinions are our reports. So it's not the district approving the reports, it's the district basically receiving the reports.
Okay, well then let's make that the motion.
Second,
In a second. Okay, I didn't mean to make it, but I guess I did.
you did.
So is there any comment before we vote? Okay, all in favor, say aye.
Aye.
Aye. I think that passes unanimously, so we can forward that to the full board. And there will be a short presentation, I'm sure, from our auditors again, and a little shorter, and give you some highlights, and then we'll make sure a future agenda topic on the unfunded obligation. That proposed meeting schedule is our next topic.
John, before we do that, so I have a question. Is
Mhm.
this something that we should read over like an agenda and ask questions about, or how do we handle?
Yeah, usually it is included with the board materials that go out. I was thinking of maybe sending an email to the members, but Candace or Erica could do it. That basically said kind of the high view, because I think some members are going to just be blown away and scared to death to even open it at, almost 100 pages. So if they knew that pages 4 through 12 were the management comment, which is basically the overview of everything, you don't really need to read the whole thing. If you read 4 through 12, and the reports are basically 13 through 18, and then page 95 is the Cliff Note summary. If you know that, maybe that would encourage them to actually read that. And of course, if they wanted to dive into all the notes in the middle, they can. But if Candace or Erica will send that out when it goes, I think that will help them, or I could even send it just FYI.
Yeah, can we send it out with those added notes for review efficiency?
Candace, I think we could do that. And Hedva, yes? Yeah, we can do that.
Yeah, because I
Great.
think once they get that, they'll know where they want to read and not say, oh man, I can't handle 100 pages of numbers, I'm not going there.
Yeah, so we can annotate that, we can offer that instruction when we send it out as part of the board packet in January.
Great.
Great.
Okay, so we are on meeting schedule, and I didn't see it. I'm not aware when our next meeting is or needs to be.
Oh, the problem with the scheduling was February.
Oh,
9th.
yeah. So you did, you're on it. Okay,
Yes,
so
so-
how do we accommodate you, Tammy?
And Erica, I think.
Yeah, we're coming back from the ACCT conference, and actually, I don't know if Jim is going to that, but he might.
Yeah.
So I don't know the consequences of pushing it back a week or moving it up a week, or what is on agenda for that meeting. Erica, Candace?
Yep, I'm taking a look right now.
The 311. On the February board meeting, this committee is the 311 second quarter.
Yeah, and I don't even know, just for 311, having a meeting is warranted just for 311. That isn't the end of year 311.
We were also going to invite our PARs.
Oh, okay, now we're
Amount
talking
into-
significant.
So we could do Wednesday, February 2nd. Would that work for folks?
Jim and Tammy, how's
Yeah.
that work?
Yes,
Great.
that works.
Okay,
Okay,
Groundhog Day.
okay, we will,
let me
we'll
quickly get
change.
there myself now that I just assumed everything would be fine with that.
Okay,
Yeah, no, that should work for me.
And
Okay, great.
Erica, when is ACCT?
it's the following week. It's the 6th through the 9th.
Got it.
Yeah,
Okay.
so we'll
So it-
change that to the 2nd.
So in addition to the 311 and just our update with our PARS representatives, is there any other future agenda topics for the committee? Okay, now this is that never used to be, but seems to be touchy time where we normally would have had an executive session. That's not on agenda to have. And so I don't think we will be having an executive session. I might just, as chair of the committee, ask Rick if you will either reach out to me. You can get my email or cell phone if you want from the administration.
Sure.
Maybe you and I can have a 3-minute conversation that I think is a part of good governance. And if anything that comes up in that conversation brings up anything that I think the other members ought to be alerted to, I'll for sure do something about it. But I'm sensing from the positive tone of this meeting and all your positive comments about our administration and what they did, that this would probably be a 30-second call. But I think for
Absolutely.
good governance, it needs to happen.
Sure, not a problem.
All right, I think that gets us to item E, which is adjournment, unless somebody objects to that. Again, a lot of kudos out to our management team for the wonderful words they said and reported on, and you've kept true to yourself as you guys have done it every year so remarkably. Just makes me proud in
you.
another way to be part of PCC. In a very important way, obviously, to make sure that there's a PCC in the future for many students. So thank you, guys.
And
Oh,
I'll
thank
just-
you.
I'll just
We have
add
a
to
rock
that,
star team.
Also, thank you to our audit team as well. Thank you.
Yes,
guys.
thank you very
I
much.
do,
Ryan and
guys, you
Rick.
do a great job. You get us the stuff we need and kind of, separate it when it's a lot, quick to find what we're talking about. Great answers. And I still remember Rick's comment from a year or two, last year, the year before, I take that one page, I get my magnet, I put it up on my refrigerator.
Oh,
Just
yeah.
like you said, Rick. I listen to what the auditors say, My wife keeps asking me, what's this piece of paper doing on the refrigerator? So anyway, thank
Yeah,
you,
those blank
guys.
pages are golden.
Yeah,
Yeah.
thank you.
Thank you, guys. And
All
happy
right, take
holidays.
care, everybody.
Happy holidays,
Everyone,
everybody.
happy
Yeah.
holidays.
Yes, thank you.
Bye-bye.